Hello traders and welcome to a new day trading strategy video of mine. In today's video, we're going to be going over the types of stop loss patterns that aren't exactly stop loss patterns, but rather just trends. So these are the kinds of patterns that we actually want to trade with the trend and not exactly against the trend, as we've been doing with the past stop loss patterns. So a quick recap on what we've talked about part 1, 2, and 3. Part 1, we talked about the theory of institutions needing high liquidity to fill their orders, and convincing retail traders either to hit their stop losses or convincing them that the market will move one way to end up moving the other. And we talked about the specific formations that might occur with 3-point reversals, 4-point continuations, contractions, and expansions, as you can see here. And in part 3, we talked about the different types of tools that one could use to spot a stop loss hunt, including the order book and large clusters of limit orders, the large trades tracker, and CVD, the cumulative volume delta. And you can find all these indicators on tensorcharts.com. And finally, with part 3, we talked about how exactly one would trade into these kinds of formations with the amount of risk that a trader would want to take. Very aggressive risk, putting your limit orders at likely stop loss clusters, and more conservative risk, which is waiting for that confirmation to close back in the trading range after a stop loss hunt has completed. So what we're going to talk about here is what exactly is not a stop loss hunt. So the first formation that really isn't a stop loss hunt is 3 highs being created or 3 lows being created. So what I mean by this is we have the first high here, second, the third high. So what's occurring here is that we see this higher high being made, and this could be a type of 3-point reversal or maybe a 4-point continuation of this downtrend, and the market goes down. But once we see, after this second high being made, weak bearish momentum at this point here, and then low tails, and then price actually moves right back upward and moves above this previous high on very high momentum and on very high volume. This just doesn't look like a stop loss hunt. This is what you're going to see in the beginning phase of an uptrend before you get that rapid development phase that occurs later. Sometimes that rapid development phase might be the first initial phase. Sometimes it might be the last, as in like a overbought phase, or sometimes it can be a wave 3 kind of in the middle. And here we saw that the very rapid development had occurred about in the middle of this uptrend. So yeah, as you can see here, these 3 highs are typically going to be pretty bullish. At this point, it'd be a little bit unclear of whether this is bullish or bearish, probably a little bit more bearish. But then once we see this, we're going to be pretty confident the market's just going to continue moving upward, very likely. The one thing that I will say here is this does look a little bit like a Wyckoff distribution phase. If anyone was wondering about that, with this being the UT, the upthrust, this being the UTAD, the upthrust above distribution. But in reality, I don't really think that this looks like a Wyckoff pattern, because with Wyckoff, we need to see more pullback than what we saw here. This is clearly showing us that the bulls are in control and that the market's probably just going to keep going upward. If this was a Wyckoff pattern, we'd probably see some more fake outs to the downside before moving up, before springing upward to move downward, if that makes sense. The sign of weakness. We see one here, but we might want to see more than one there. But that's just a quick note on Wyckoff if you are familiar with Wyckoff. So we can also look at is 3 lows. And when we see 3 lows being created and they're spread apart, as you can see here, these are spread apart. There's significant time in between each high being created. We have our first low here, we have our second low, and then our third low. You could even call this a second low and then this a third low. Whatever way really works. But the important thing to note here is the price action, the volume, and the market structure. So the structure here does look quite bearish, even if we were back in time at about this point here, because what we see is what doesn't really look like a stop loss hunt. This just more looks like a downtrend. We see a low, we see this lower low with a tail, so this looks bullish for the moment, and then we see a high tail showing that likely one or a few buyers probably market bought, and that's why the market goes up to here. And then we see quick pullback here, which is not a great sign, and then we see a move back up to here. That does have pullback here before moving weakly upward, and then we see a volume spike at the top. Then we see quick bearish movement down here. The 61.8 retracement of this move is not respected the market just continues to move down. This is just not a good sign for a stop loss hunt. In a stop loss hunt, you'd expect this kind of accumulation phase. You'd expect to see price having a much harder time going lower, not much harder time going higher. And the reason that would be is if you thought that this was the stop loss hunt phase, then you'd expect that price would go up and then have a hard time going down, something like this. And then just continue to go up and not really have that much pullback here. It would just continue going up. And the reason that is there would be many institutions who are propping up limit orders to try to get their positions filled, or HFTs trying to get their positions filled for the eventual uptrend to begin. And you'd also see many retail traders market selling to institutions as the market went up here. And if you wanted to confirm that, you would just have to look on tensorcharts.com, their order flow section, to get a confirmation. So I think this is pretty clear, just a downtrend with these lows being created, not much bullish movement and not much bullish volume either, and then a volume spike at the top of here and a high tail here. So this kind of formation would not be one that would be a stop loss hunt. It doesn't really look like a 3-point reversal or 4-point continuation or really the other patterns that we talked about. And even if you were to argue for this kind of structure being a stop loss hunt, well, you have some issues because the market shouldn't go down this much for triggering stop losses here. And it really shouldn't go down this much if we're trying to trigger stop losses here. This is just what a downtrend looks like. So another thing that I want to talk about is the rapid breaking of highs and the rapid breaking of lows, because I know that this can be a little bit tricky. So in a strong downtrend such as this, where we get this beginning phase of a downtrend, and then we see the just low being created, lower low here. We get at least 3 lows here. This again is quite bearish because you just have to ask yourself, is there enough time in between for traders to put their stop losses below support? Probably not. When we get this low created, let's say that some traders have bought. I just don't think that within 10-15 minutes there'd be that many stop losses here. And if there were, when the market does this again and triggers some here, and then again here, I just don't think that there are many stop losses at this point. I think that institutions aren't trying to trigger stop losses to accumulate positions, but rather the price is just spiraling down because of the high selling. So this is the kind of formation, this rapid breaking of the low, 1 break, 2 breaks, just many rapid breaks of the low, that really isn't a great sign. But I do want to contrast that with what we see here because you might wonder, wait, this is also a bit of like a rapid breaking of the high. Well, what we see here is just a weak breaking of the high. We see a long period of consolidation, and then we see this tail here, and it's broken twice as I can see here. So that is three highs. But each time that it's broken with a tail, and price immediately has pullback. And I'm just not seeing too much bullish movement here. But what we see here is this high, very strong downtrend that has more volume and momentum than this uptrend previously had to go to the consolidation phase. And this high momentum downtrend just looks like it's just going to continue moving down, and surprise, surprise, it does. And I think this was the previous picture. It might have been. But you can see that these new lows here are just not stop loss hunts. Like this is not a stop loss hunt of that. This is not a stop loss of that. What might actually be a minor stop loss hunt is if any retail traders had accumulated positions here and tried to buy in. Maybe it's a retracement or RSI oversold or something. We see the market does trigger some stop losses here before moving upward. So that's kind of interesting. That we see that kind of formation there. But yeah, so I just wanted to say that rapid break of the low is not a good sign. The only sign that the market will continue going down. The only sign that the market might not do that, as in here, is these tails, as you can see here. These weak tails with weak previous momentum, long period of consolidation. So in all, if you want a reasonable probability of a time not to take a trade, when you see a low constantly being created, a new low after a new low after a new low, that is not a market you want to enter into. You want to see established support, a dip below that support, and then close back on the trading range, and then price goes higher. That is a really good sign. But this really is not a good sign. So same works for here, as I was going to say here. So what I also want to talk about was part 3 was strong bearish momentum and high volume. So what we see here is we do see established support, and then we do see a move below. So this might actually be a stop loss sign. I mean, we saw one here, right? And then price moved higher in a V-shaped reversal. This might be a stop loss sign. Well, there are two main issues, and that's really it that we probably don't want to buy into here, or if we had bought in, we probably want to take a loss here. One is that the price has really moved far beyond the support structure here. If I was thinking that any retail traders were trying to place or stop losses, I don't really think too many of them would be placing them all the way down here. I think they would probably place them a little bit more here, a little bit more conservatively. And additionally, we see high momentum, high volume. And this is a sign that the market's probably just going to continue in that direction here. So we see this energetic first phase of the downtrend, and we just see a continuation of that energy going downward. So strong bearish momentum where it clears well past support, that's a pretty bad sign. But it is really important to say, you might wonder, wait, we get strong bearish momentum here, right? I'm not going to disagree with that. But we see immediate bullish pullback back into the trading range. And price doesn't really go much lower than this previous low. Barely makes a new low, then goes higher. So this is going to be something you might want to buy into around here to potentially target a target up there. This is something that looks quite bad. So same works for strong bullish momentum. We see a long period of consolidation and then just a very strong uptrend up to here. This isn't a stop loss sign. This is just an uptrend. I know this just goes without saying for most, but I think you can see it here. And the market does continue moving upward. So what I want to talk about is, okay, when is it that sometimes I see a very strong move, but then the price just goes in the other direction? And the reason that occurs is when you get immediate consolidation after that single move, stop loss. And I know, terrible title, but it just describes what I'm talking about here with these stop loss structures. So what do we see here? We see prices consolidating near tops. That is typically bullish. Consolidation at resistance is typically bullish. Consolidation at support is typically bearish, as many traders know. And we see this rapid just single directionally move, and then price just begins to climb up and consolidate here. This is actually more of a bullish sign than not. And the reason that is this initial drop probably happened on a few sellers or maybe a major seller who sold very quickly. And then the bids and the offers conformed to that price level once it came down here. You know, the offers weren't just staying up here after the sell. They would probably close down here. But what we see is just not much bearish movement downward. Most downtrends moving on this much bearish momentum, this much bearish volume would probably already be much lower. So this kind of looks worrisome for the bears and good for the bulls. The bulls have successfully stopped the bears from going much lower. This was actually a stop loss sign, and the price went higher, as you can see here. Price and continued to go up to there and higher. So I think that it's really important just to take a look at why that occurred. And this single move down and then consolidation, I think, is why. But we don't really see that with other moves here. For example, we don't see a single move here. We see a bullish strength, and then we see consolidation, and then we see this move here. This move was here. But it's important to note that also price doesn't really go that far away from the previous low here, the previous support level here. If it had gone much lower here, then the likelihood of a downtrend is higher, of course. But it doesn't really go that low, and it also consolidates, so that would be quite bullish. So this is a system that I think many traders have probably seen by now. That occurred on Bitcoin, I think, a few weeks ago. I think April 18th. So this was a pretty crazy one that kind of defied a lot of TA and defied a little bit of stop loss structure, to be honest. But the important thing that we do see here is we see an energetic short period of selling, followed just by really not much selling after that. With a high momentum, high volume downtrend that triggers a lot of liquidity down here with many stop losses, we'd expect price to just continue moving lower on a short period of consolidation. But it's these longer periods of consolidation that typically lead to actually a reversal. We see that here. And then we see a single directional, that single kind of move where likely one buyer had bought a decent amount of Bitcoin, or a few buyers had bought, and then immediately pressed the price up to here. And then what happens is that the offer was likely quite strong. There's a lot of Bitcoin being limit sold, so price can't really go much higher. And then we see this long period of consolidation that spells doom for the bulls and looks good for the bears. Then price goes down here. And then this one, I would say, does defy stop loss theory a bit and does defy just TA a bit. We do not see a prolonged period of consolidation before this. We just go back up. So this one can't exactly be explained, but I will say that when you see these kinds of structures being made, maybe you just want to avoid the market altogether. And that's fine. With high periods of uncertainty, that's where we can get trapped into positions without a stop loss or have all of our stop losses hit, and bad things like that with more uncertain markets like this. So unless you really understand supply and demand dynamics with support, resistance, and consolidation within after large moves, then maybe you probably wouldn't want to try to enter a trade into any of these kinds of formations on this page here. But yes, that's going to be it for this video on stop loss hunting structures part 4. So just to recap on what we talked about the 3 types of patterns that are not stop loss hunts are when we get at least 3 new highs or 3 new lows being created on high bullish momentum, or flip side on high bearish momentum, and on high volume and on high bearish volume and high bullish volume. The second thing that we saw was that rapid break of a high or that rapid break of a low typically just leads to a continuation in that direction. Like I had said in the first 3 videos that we had seen, when you see a stop loss hunt, it's typically very violent and quick, and then you get an immediate reaction back in the trading range. If you do not see an immediate reaction back in the trading range, then one of these might occur where you get the 3 highs, the 3 lows being created, rapid breaks, or the worst, if you're trapped in position, definitely the worst, high momentum, high volume, past support, or resistance if you went short. Because this is just typically not going to be a stop loss hunt unless, and that's why I put the 3-star here, unless you get a long period of consolidation where supply and demand are becoming about equal. And there's just not much energy to push price lower, or if price goes up and then consolidates for a long time, not much energy to push price higher. And that's probably going to be a spot where you might trade against the trend. But these 3 are spots that you do not want to enter a trade. That is not a stop loss hunt. Okay, so hope you enjoyed that video, and I will see you guys Friday. Good luck on the challenge.